How is your mortgage impacted through divorce or separation? Something we get asked a lot, and there are 4 key solutions that we have at Blair Financial Services, and we'd be happy to go through those options with you now.
The impact of divorce or separation on your mortgage, something we get asked a lot about at Blair Financial Services, and it's certainly something we can help with. The first thing I would say at the start of this conversation though is always make sure you maintain the mortgage payments. Regardless of how difficult the split is or anything like that, it's really important that the mortgage is kept up to date and always paid. The reason for that, and I've seen it many times over my 30 years of advising, is that we'll have clients that impact their credit scores for the next 6 or 7 years by missing a payment. It's just not worth it. So always make sure the mortgage is maintained to keep both parties' credit files and their history for the mortgage payments clear. So that's really, really important. Now, there are 4 options really when looking at this situation after divorce or separation. The first one is to approach the existing lender and maybe take the mortgage in the name of one person. It's a process called transfer of equity, and it's transferring the mortgage from maybe joint names into a single name. Your existing lender will check affordability to make sure that the new mortgage is affordable just in one person's name. But should they approve it, they'll agree to put the mortgage in sole name. You'll involve a solicitor to get the deeds updated, and then the mortgage will proceed in that way. We can help with that. We can help answer any questions about transfer of equity, the process each lender has, and guide you through those options. The other thing to consider is maybe to remortgage. Remortgage is often useful in this process if somebody's considering paying out the other party, so maybe needs to borrow some extra money to be able to do that. We would look to remortgage in the new person's name. It's just keeping the mortgage in their own name, remortgage the mortgage itself, and maybe borrow some extra money to obviously pay off the other party. Clearly, as whole market mortgage advisors, we can shop the market for the best deal for the new mortgage, and have to look at options for that. The third option to consider is the one where you would just have to keep the mortgage joint for the time being. That might be because one party can't sell or take the property on in their own names. It's quite possible that you want to sell the property and therefore you need to keep it in joint names for the time being while that's going through. It just depends on personal circumstances really, but it might be that you've got to keep it joint for the time being. But as I said right at the very start, please make sure you maintain the mortgage payments. There's nothing worse than missing the mortgage payments for future credit profile. Final option really is selling the property. Clearly that's probably the cleanest way of doing it, because you would sell the property, pay off the mortgage, and each party would take their share of the equity. Clearly it's something that people do, and then obviously as each party goes to buy new properties, we can help out with the mortgages for those purchases, and they would just be treated as normal next time buyer purchases at that point. Those are really the 4 options. What we would do is whatever solution you agree, make sure that's within your divorce settlement, so that's all covered. And then, the next steps is really to come and see us and speak to us. So for full details, visit our website where there's an article that will explain in more detail the things I've gone through. We would always say speak to an advisor. Even in the very early stages, speak to us as soon as possible. We can help out, we can answer any questions, we can talk you through the process and go through anything you need to through all the stages really. And obviously give us a call, contact us on the website or follow us on our YouTube site.